right, today we've got Travis Hayden, another fellow self-storage investor out of Ohio, actually out of Columbus, Ohio, just like myself. And appreciate him coming on. And Travis, why don't you give us a little intro about yourself and what you're doing right now?
Well, right now I'm just doing some self-storage. We're doing rental properties here in Columbus. We're not from around here. We're actually from the New York area. So we moved out here back in 2016 and just been trying to, I guess, get out of corporate, work like most people are. Don't want to be working for anybody. So this is the path that we chose.
For sure. So I didn't know you were in the rental properties, or maybe I forgot. I don't know. So what are you doing right now? What's your W-2?
So W-2 is electrical engineer.
Okay.
Work just south of, it's remote work. I work from home, but automation controls.
How was that? And I'm just curious, how does that job work remotely?
I'm a designer. So I
Gotcha.
do industrial control panels for, say, like the big three. We integrate lasers into processing lines.
Awesome. That's cool. How long have you been doing that?
10 years.
10 years. Okay.
Yeah.
So you
I
probably
went to college late, so.
okay. And then I'm assuming you got that job while you're in New York or a similar job and then transferred here. How'd that work?
Yeah, that's a good, interesting story. I was a mechanic like right out of high school, and then back in 2008, kind of decided to change paths. At the time, I was living in Youngstown, Ohio, for a little bit, and decided to go to YSU there for electrical engineering because being a mechanic isn't really that lucrative. Can't get you to your goals. It's difficult. A lot of expenses being a mechanic, and then went to engineering school. Decided to actually go back to New York. So I graduated from SUNY New Paltz, upstate New York, about an hour and a half from New York City. And while I was there, I got multiple internships. So Parker Hannifin, smaller companies, and that kind of led me to nutraceuticals, automation, out in Florida, New York, and they hired me before I graduated college. And then my wife wanted to go to OSU to further her education. She had a bachelor's from St. John's in Queens, and wanted to further that. OSU had a good operation. It's Columbus. It's affordable living compared to New York, very expensive. So it kind of made sense. Made that jump, applied, flew out, took some interviews, got recruited, and started work. Moved on I think it was a Thursday, Friday, started work Monday.
Oh, wow.
Back in 2016. Been here ever since.
That's awesome. Well, Columbus it's funny because I don't think of it, but it is it's becoming more of a destination city. Like you said, it's affordable to live here and
it's
a lot of jobs.
For now it is.
For now, right. Yeah, Amazon seems to be taking over Central Ohio.
Yeah, that Intel. We've got the battery plant for Honda out west in Jefferson. Albany is, you just can't even get in there anymore. Like it's crazy.
Yep. So, all right, that was 2016. So what got you into rental real estate and when was that?
So my family, on my mother's side, my grandmother, grandfather, they've always been into real estate ever since I was a kid. They've owned properties in Hawaii, Oregon, strip malls in like Virginia. They live out west. So they own the bed and breakfast on the Oregon coast. Like they've just always been like entrepreneurs. So I kind of always had that there. The thought, saw them, how they live their lives, kind of raised by them. So that's kind of where the rental property thing came. And then of course, bigger pockets, but that was, was a long time ago, Bigger Pockets, 2016. So I was probably listening to that for a couple years. And then I, at that time, I don't know how much you track like your, I don't know, net worth, I guess. That was kind of a big number for me. Still is to this day, but I've already exceeded all my goals and it is what it is. But at the time I had a negative net worth. And that was because of college debt. We didn't really have any credit card debt. So it was a slog to get everything paid off and get into rental properties. But we were able to get a duplex. We were going to live in it in Hilliard, but it's Columbus City, Taxes, Hilliard School District. So it's like 3 houses from the Hilliard zip code, which is fantastic. So we were going to kind of house hack it. But then once we got it, we had a long-term tenant that is still there from 2017. And the other tenant moved out like immediately, and we renovated it completely. And we've had 2 tenants since, and the rent was just so high that it didn't make any sense to move in. We continued renting actually until we bought our house here. In Columbus.
What year was that for that duplex?
17. It was on my birthday, 2017.
Nice. Yeah. Well, it's crazy. I was going to say, and rents have probably, because my first rental was in 15, and that was actually in Hilliard too. Okay. So in 17, how do the rents compare now compared to 17?
So it's kind of crazy. So initially I was balked at by the property managers. I use property managers, R&L Property Management, shout out. They're great. Another group of engineers. And they kind of were like, I don't think you can get that rent. I was like, eventually we can, this area. So it was originally, when we got it was like $900 a month.
Was it 2-bedroom?
No, it's three, 2.5.
3, okay.
So yeah, so it's 2.5 bath, 3-bedroom, 1-car garage, duplex, side by side.
Oh, nice.
1 lot. Yeah, ideal. But it's over off of Cemetery behind like the Target back there.
Yeah.
The rents were like $985, $950, and right once we took it over, we bumped it to 12, and we had a renter in 2 days. So it was kind of like, I think we lowballed it. And next thing you know, all of our neighbors started doing work, and next thing you know, now we're at $1,400 a month in 2024. And we don't really push rents. I'm not we're like 2.5% rent increase annually. Like I'm just trying to keep up with inflation. I'm not, getting crazy here, capitalist, whatever. But they gradually just have gone up to 1,400 with the 2 turnovers we've had and minimal turn costs. So it's been pretty good on that duplex.
It sounds like you've had pretty good renters. How have you done that?
I'm super meticulous. So yeah, I think that comes down to the property management company and you. You can't discriminate. Those aren't things, then you shouldn't. But there are, certain things you look for, like red flags in people's, I don't know. I think it's just a feeling, but they do the background check. They fit within the criteria. And I don't know. I think we just got lucky maybe, but we're pretty meticulous about, I don't know. I when we were doing it before we had the property management, because we couldn't just do it right away, I was really, I just wanted to see if they were paying their bills. If they paid their bills, they're going to pay our bill, right?
Yep. Yeah. And I'm sorry, I forgot you use a property management company. I brought that up because it seems like a lot of people that I talk to stay away from rental real estate because of the tenants, right? Mm-hmm. And that's
why I did property management.
Yeah, you either get property management or you learn how to get great tenants. And there's definitely a way. We'll call it, I don't remember, 4 or 6 years that I had some rentals. I would do a background check, soft credit pull, and then little things, kind of like what you said. Like you kind of get a feeling. I've heard little things of like meet them at their car and see how messy their car is. If they take care of their, if they've got McDonald's bags in the back and all this trash, like you don't want to rent to that person.
No, I agree with that completely. That is actually, you're bringing me back. It's been a while since I've done any of that, and that was definitely something you would do. Yes, you would meet them kind of where they're at and assess.
Yeah, it's amazing how little things like that you can figure out. What kind of renter they're going to be.
Especially if you're observant, and I think punctuality is a big deal too. Like if somebody says they're going to call you, or send you an email or documentation, and they don't do that, and you're hunting them down. I mean that's foreshadowing of what you're going to deal with.
100%. And if they're late, like if they were late, I'd just leave. If they were 2 minutes late, I'm out. I'm not waiting.
Yeah. Yes.
No, that's all good stuff. I don't know how many people listen to the show that are in rental real estate, but single families, multi, but it's still. Listen, I think single family rentals are the safest asset class that we have. We're always going to need a place to live. People always, I know apartments and multifamily is hot right now. But I think at some point, everything's cyclical. I think at some point it's going to turn to where the next generation is going to be like, you know what? I'm tired of renting. I want a house. I want some space, even a duplex, right? You still have space. So I think the fad of apartments, especially where we're at, right? We're in the Midwest. Some areas you can't get away with that. Like New York City, you're not gonna have a house in New York City. But I don't know. What's your thoughts on that?
So, I mean, I don't disagree with you. I think housing is very expensive. We're looking at, potentially selling our current, personal residence and moving like closer to the city of Columbus. And I mean, I'm frugal, man. I can't bring myself to pay that kind of money for the same thing I have, just on a different lot. So I think it really depends on, where you're at, whether you're going to rent or buy. But I think a lot of people, I think for me personally, multifamily, having neighbors and stuff, that wasn't really great for me. So I think it just depends on, I really do think it depends on who you are, where you're at. And it is cyclical. And I think that multifamily will definitely dip. It's been hot here in Columbus since 2015, it's still hot. I mean, trying to find a quad or a 10 unit here is absurd. There's one up on Parsons right now, but it's like no parking. Like there's a reason why it's for sale. And it's been there. It's kind of ridiculous here. And single family, I would agree, is very safe. We still have a single family out on the east side that has done very well. That was like a burr. We did that, and still same tenant since the day we did it years ago. And but very safe in the way. I think it really comes down to also the way you want to sell it, your exit strategy. So like a duplex is a little bit more complicated to exit from, or a multifamily, smaller, I would say smaller than like a 4, because you have to have like a vacant unit, because you could not possibly sell it to, a homeowner who wants the rent. You could also, which is going to be higher in value, or you can sell it to a, investor, which are going to get less money, but it might be quicker and easier. Depends what you want to do. But with single family, they move out, you do it, you're ready to go. There's a lot more timing involved with multifamily too on your exit.
Yep.
It's kind of how I look at it.
Yeah, no, a lot of great points. It's single family is going to be the easiest asset class to get out of too, right? More exit strategies. How many rentals do you have? And then how did you find them and fund them?
So we only have the single and the double, and funding was personal, bank, conventional, 25% down. Can't remember. It's back when we had like 3% interest rates, which is fantastic. Like big name banks. Finding them, I'll give Panzera Realty. I don't know if you've heard of them. They're another great property management company in the city. They kind of specialize in duplexes. So while I was trying to, I guess, find them through means, we have a great auditor website here in the city of Columbus and Franklin County. So it's pretty easy to find people to contact, but I was kind of double pronging it, and I was like, oh, let me do that. Let me talk to actual homeowners, and let me talk to brokers. So I found them, and that's how we found the one in Hilliard, and that was great. And then the next one, was a wholesaler, and he brought that one to us. I think we picked it up for like 60, and now it's worth like 215, which is it's crazy. Yeah, it wasn't worth that 4 years ago.
Yeah.
But it was completely abandoned, and we basically cashed out of that. But and that's why it doesn't make sense to get rid of it right now. Locked in a renter for 2-3 years on a lease, so it's pretty good.
Yep. Well, we had from basically after the crash till 18, 19, basically a decade, values were basically flat, right? Mm-hmm. At least here in Midwest. I mean, I think the coast they went up, but Midwest were relatively flat. Mm-hmm. And then basically, maybe just before COVID? Because I sold mine off just before COVID, and right as COVID hit, I sold off, like literally, it was like March, I think. I sold off my last single family rental. But appreciation's like doubled since then. I mean, I sold my one in Hilliard. I think I bought it for 80. I think I sold it for 135 maybe. I think it's worth like 235 now.
Yeah. Oh, no, I can't even buy anything. Like, I can't. But I choose not to, because I'm like, this is crazy. I bought that duplex for 239. It's worth $500,000 now. Like, from 17 to 24, and it's like, out of sight, out of mind in a way, really, for me. But the same thing with the single family that we bought that in 19, and it went from, I think, it's ARV, once we actually did what we did to it, it came up to about like 100 from 66, and then it got bumped to 215 now. That's crazy. It is. That's why I was saying it's really hard to buy. Like, we were looking at Grandview, like trying to buy a duplex over there. You're talking $350,000 for a mediocre, needs a lot of work.
Yeah, just 1,600 square feet, and
the deals are out there. It's just you need to know who you need to talk to, and it's about relationships.
100%
right now.
Yep, relationships, and you got to keep digging. I mean, it's one of those things. It's no different than any other asset class. You just got to keep digging. The more you're doing it, more digging, the more you're going to turn up.
I feel like Corey really made it difficult here in Columbus with the amount of people that attend those association meetings.
Yep,
it's turned out so everyone owns rental property. Everyone you talk to, you're like, oh yeah. So it just makes the competition thick. But I think it really comes down to timing, who you know, and do you actually have money?
Yep, 100%. I want to go back. You brought up tracking your net worth. When did you start tracking that, and what triggered you to start tracking? And do you still track it too?
Yeah, well, I've exceeded my goal. So I do track it, actually. I caught it up a couple times a year. I use like Personal Capital or stuff like that to track all budget and everything. So I'm kind of the engineer in me. I'm a spreadsheet person. Anyone that knows me knows when I give answers, I give decimals. Most people are like, is it $18 or 19? It's like $18.72. So really that started way young. I was always just I grew up in an affluent area in Rockland County, New York, and just always, it was like keeping up with the Joneses. Everybody had more than you, nice things, blah, blah. I'm not materialistic, but I just wanted to have a place to call my own and have financial security. So I kind of fell into the financially independent movement. I know a lot of people have a lot of opinions about FIRE and all this, and I'm not trying to retire early necessarily. I'm just trying to go out and do what I want to do, as opposed to have a 9-to-5 and not have time to go do what I want to do. So that kind of falls in line with frugality and net worth, right? So just like a business, you have your income, you have your expenses. Your goal is to increase your income, reduce your expenses. So that's kind of how that all came about. It became a game, and we at one point were living off of 70% of our income, saving 70% of our income, living off of 30. We've since, I think we're around 50% now, which makes me feel comfortable because one of us could lose a job and we'd still be fine with all our assets and everything. We also don't touch any of the income from any of our assets, including storage. That all just goes down to either pay the debt or CapEx or planning for exits. So, I mean, that's literally how slim we live. We don't live like paupers, in the dirt, like nice things, but like it's everything is, I guess, budgeted, paid attention to, tracked by me. My wife hates it, but yeah, I've been doing it for a really long time.
Yeah. Well, and you bring up, I mean, it's a great thing to bring up, and I kind of forget a little bit about it because I started tracking my net worth so early in, I guess, the journey to becoming financially free that you kind of, now it's a routine for me. It's almost like I forget about it, but I do tell people that are starting off, like, track your net worth, even if you're not just starting off, wherever you are, right? Because if you're in rental real estate in any type of way, you've got a business, and you need to track that along with the personal side. We're not taught this stuff. Like, it's something that at some point, I'm sure I read a book or heard a podcast and someone said, hey, you need to start tracking your net worth. In fact, I do kind of remember it was a podcast. I forget the guy's name. Yeah, it's not important, but yeah, he was like, we do that every month. So since then, I bet I've been, I'm easily 10 years, maybe 12 years in tracking my net worth. Yeah. And like you, when I first started, we did have a house, so we may have had a little bit of equity, but it was basically zero, right? But the more that you track it and you watch it grow, the more your brain starts to think of ways that you can make it grow. It's no different than trying to lose weight or trying to put weight on or tracking how much you lift. It's the same thing. The more you track, the more gains you're going to have. So yeah, it's and you talked about you already beat your goal. Do you have another goal with your net worth?
No, I realized that it was a big goal. I never thought I'd even reach it. And then I reached it. And now I'm kind of like, I have different goals now. It's not financial security is important, but net worth is net worth. I kind of actually want to spend some of my money now, but in a different way. Like, I kind of want to, like, I don't know, use my time and, be able to, with the money that I have, pay my bills. So it's a little different. I have a goal now maybe of quitting my job 45. I'll be 40 next month. So 45, I will not have a job. It will not happen.
There you go.
We'll be done. So that's what I'm kind of doing. I'm just trying to pack money in the coffers, track my net worth. Like, when we started, we were like negative 40, something like that. That was daunting. That was a climb. And I had $70,000 in student loans. And I think my wife had like some, $10,000 in credit card debt. I'm pretty open about money. So
yeah. No, it's good to talk about it. That's how people learn.
Yeah. And I think our goal was to hit $1 million net worth, and we've far exceeded that. And it happened. It's that thing of, like, people say it all the time, and you don't know what it is. And it seems like impossible to obtain, but it's that thing of, like, persistence. Like, once it's like that hockey stick, and I can't remember that book. Can't remember it, but basically, if you just keep putting your feet in the right direction. If one thing that I do is I'm like, this is my goal, and I always ask myself, does this decision get me to that goal? Like, is this going to keep me moving in that same path? And if you just keep doing that, you'll eventually get there. Head down, tracking it, managing it, being modest or minimal or whatever you're trying to do. It's very difficult to be extravagant and then get what you want if you have no money to start with. Like, that's just kind of silly to think you can do. But I think it's really important to know that you will get there. It's going to take a lot of, and quite honestly, like I said, like, I started this actually in 2017. It is now 2024. It has not even been 10 years. And I went from negative to over $1 million in net worth. And now what's happening, which is really fascinating, like, we just got another storage deal. We were talking about this offline. Like, we'll be closing on August 1st. I'm not doing any more marketing. I did that for 2 years to find our first place. And now And then he's got another one lined up for me for the following year. And it's like, I'm not even asking for these anymore, but the same thing with rentals, like the network and the people, how much time you invest. I'm putting my feet in the right direction by going to these meetings, meeting people, handshakes, keeping in contact, emails, text messages, remembering people's names, like just doing the simple things. And eventually it all just starts coming to you. It really does. And I'm no expert. I'm no, I'm not Mark Cuban. Not, no, I don't have a name people will remember, but that is how you get there, in my opinion. It's just persistence and motivation, self-motivation, drive.
Yeah, man, that's all awesome stuff, and couldn't agree more. And I think it's very underrated. I think a lot of people give up and they don't even know they're giving up, right? But you're doing all the small detail things that keep you going, keep the momentum going, and like you said, point your feet in the right direction and just in the right direction. And it's all positive stuff that you're doing. You're not getting sidetracked. You're not looking at one deal over here and kind of forget about it for 3 months because the job's busy, and then you go back to it, and you can't do that like that. You just lose all momentum. You're keeping the momentum going, and you're keeping the everything hot to where it's you got warm relationships, you've got things going on in the right direction. So that's awesome. Is your I was going to ask before, is your assets, is it just real estate, or do you have 401k, or how's that look?
All that, yeah. So I also believe in diversification. So we've got, so basically I have like 3 buckets. I also invest in Fundrise. I don't know, it's like a pet project. Like I invest in the company and in that because I believe in, we've talked about this, Ben and his model, his business model. But yeah, we've got 401ks. My wife works for a nonprofit, so she has like 403bs, 403as. And that also goes into the whole like financially independent thing. Like it's kind of how they exit the workforce, is they would use a 401k or backdoor Roth IRA, all these complicated things. But we also have brokerage accounts. So I basically just leverage Mr. Bogle's Vanguard and use ETFs and track the S&P 500. I'm not trying to be, I'm just trying to be average, 8% return annually. I'll be happy with. I don't need 12, 13 like BlackRock. The stress of that is beyond me. And then we also do, like, now in this economy, it's kind of wild. Like cash is like sitting at like 4.25%, 4.5% interest. So that's what I've been kind of doing too, is or money market accounts or something, because with buying these assets, like, you need cash on hand. I don't want to pay a short-term capital gain because I put something in a brokerage account. So I'm like, what do you do with this? But I don't want it losing money. Inflation's going up. How can I beat inflation and have my money be at least worth what it was when I put in 12 months ago? And right now, like Discover and Amex and all these internet banks, you can FDIC, $250,000, throw $100K in there, and you're making few $1,000s a year in just cash interest while you're waiting for the next asset to come. So that's also nice.
Yep, that's awesome. What you brought up, Fundrise. Can you explain what that is?
Oh, yes. So it's just crowd-funded, like IPO type real estate investing. So crowdsourced, I should say, where they've got all the know-how. They're doing all the work. They're buying. I think they've pivoted recently, but it started up as new builds and rental properties. So it's kind of like dividends would be rental income, and then you'd have appreciation, which would be like an equity. So they were kind of treating it like equities and dividends, paying you out, and you could balance your portfolio based on what they had. Now they've pivoted ever since COVID, and they've gone kind of private lending too as well. So they're lending to developers. They're taking like 12, 13% interest on this. So your money's going into that. And recently they've also pivoted into small tech startups. So they're doing that. So it's just kind of wild. And they're still a private company, 8, 9 years, something like that. And you can also, they release IPOs for the company. So we also buy shares. And it's just kind of like, maybe they'll be the next Apple or Netflix when it comes to my share prices when they go public.
Yeah, well, so to keep it simple, you could put a deal that you've got on there, raise money for that deal, and people like me can invest in it through their platform, correct?
No, that
No?
they
I
do
thought
that.
Fundrise
No,
was.
no, I think that's, I think I know what you're talking about. That is, there's another company. It's called Crowd. I think it's called, uh, it's a little bit more elite, but yeah,
Okay.
that's how that would work. Yes. No, this is them, having professionals that do this, and they just go around like the country and they hit up like, all the hot markets. So like, DFW, they've got like all these places you're not going to get into. So, but what they do, so like, I guess the big difference here is a REIT, right? You've got REITs. We all know about REITs, but like the traditional REIT is something you'd buy through a brokerage account, right? You go buy into a REIT and a real estate investment trust, and you would never see a deal. You have no idea what the prospectus is. You don't know where they're buying, what they're doing, who's the managers. I mean, you could do some deep dives and research to figure stuff like that out, but with Fundrise, they're actually like bringing it to you. They'll literally send you an email. This is the new one. Here's the prospectus. This is what we're doing. You can
So it's their
invest
deals.
It's their deals that you're getting. So it's basically like crowdfunded equity. So, and they tell you what the debt to equity ratio is on these certain deals. They give you and you can literally see the properties. They give you the addresses. Like, it's not like this shady, it's kind of like, it's really like it's a good place to, I don't know, park your money. I kind of feel like they require you hold on. I think it's like 5 years once you buy in, but you avoid short-term capital gains. You get a feel for it. And I don't know, I think it's a long-term game. I don't know if you've got this yet, but I'm pretty long-term with like everything I do. I don't really like move money. I kind of like make a decision. Takes me a while. I put it in there and then I stay. Like when I got into rentals, it wasn't intended to be flipping them. It was like, it wasn't even really a cash flow. It was like long-term appreciation. Like I'm buying in Hilliard.
It's an investment. It's a true investment. To me, flipping is not it's not investing.
It's work.
Yes.
It's work. That's just like wholesaling, right? Like, I mean, that is work. Like the moment you get rid of that asset, you're grinding again. And that is not what I wanted to do.
Yep. Well, and what's your opinion? So, and we'll compare it to storage. What's your opinion on people that buy storage, fix it up? When we say fix it up, they're probably just raising rates for the most part to the market, and selling within, we'll call it 2 to 3 years. Do you think that's flipping, or is that some sort of investing?
Well, we both know that's not happening right now, but like in this market. But yes, prior to this, I would say that was a form of flipping. Yeah. I mean, so with a house, right? So like the first duplex, it took me 9 months to renovate that side. Again, I did a lot of it myself. The second property took me 3 months. Okay. So that's a small asset, right? If you did an apartment complex, it's going to take you a little bit longer. Self-storage, it's going to take you a little bit longer. Like there's with ours, there's 200 plus, 300 plus, people you have to deal with and kind of get it out there. And there's laws. You can't just like go in and raise the rates. You got to like send notices, do this. People are going to move out. You got to do a little bit of maintenance. There's stuff to do. So that, I would say like that 18-month turnaround is, I say if you held it for 3 years, that wouldn't be a flip. I would say that if you held it for 18 to 24 months, that would definitely be a flip. If that was your main intention, was to get in and get out, then that's definitely flipping.
It's flipping. Yeah, it's more of a job and investing. Yeah.
Oh,
I agree.
That's an exhausting hustle.
Yes, it is. Absolutely. So let's get in your storage. So you've got a couple rentals. When did you start looking at storage? How's that look? As far as the journey to get into it, learn about it. And then when did you take your first one down?
Yeah, so I started looking at it because I was like, this is taking forever to get these rentals. Like I got these and I'm like, this is just going to take me forever. Like this is never going to happen. I'm like, based on my math, I need 20 of these. Because they can't be paid off and cash flow is small. A lot of people don't understand that. Like you're only getting a couple $100 a door. Like you're not getting like thousands of dollars. So I was like, I need another asset. When I was younger, I really liked car washes, but car wash game has changed. It's not the same as it was when we were younger, where you get a coin operated car wash. Those like don't even exist anymore. And the barrier to entry for like a for us a moo car wash, right? Like a a drive through. You're talking like 11 employees, and then you're talking $1.3 million to get in the door, and then you have to manage people, and that was not something that I was interested in. Then there's laundromats. I don't really like where laundromats are, right? Like generally, like what kind of asset it is. It's normally the building doesn't appreciate. You'd need to own the building, so then there's a whole different type of asset that you're looking for, more commercial. Like then that brings you to the commercial asset of storage, right? And although it's not, I wouldn't say it's glamorous by any means. Most people are like, "Oh, are you on Storage Wars?" And you're like, "No, it never happened. No, I can't even auction off a unit for $10. What do you mean?" The barrier to entry into that can be small, especially when you're looking in rural areas or just outside of cities. And believe it or not, that took forever. You were talking about persistence. I was mailing and calling for 18 months before I got my first deal. Unlike you who like what in like your first year you're like took down 5, like
yeah, but everyone's well, and I don't want to stop you there, but I did for storage. It was right place, right time for me. I found 2 deals within 60 letters I sent out. However, when did I start single family rentals? 2014. So I had 6 years, 5-6 years where I was sending mailers all the time, just not to storage. Okay. So it looks like, oh, wow, I hit a gold mine with storage. Well, I had 6 years and I only did 4 deals, technically 5 deals in those 6 years. And I was sending a lot of mailers out. So there's a lot of work there that isn't really seen. I pivoted and right time, right place. Anyways, yeah, go ahead.
So with our mailers, like it was all about like verbiage, and that was the thing too, getting into storage. That was the hottest time. Like that time is gone, like that of where 18 months, 24. Well, no, that was like 3 years ago, actually. That was like 2021, 22, I think. We closed in 22. So I started in September of 21 sending out mailers, and I was crazy, man. I was sending out. So I didn't do like the bulk like most people do, go buy a list. I was actually doing like Google Maps. I was doing, being a little bit more creative than most people. I was using different type of letter stock. I was using blue envelopes with blue ink. I was trying to get like any edge I could possibly just for somebody to call. And most of the people that call are just like, don't call me again. So it was kind of exhausting, and I was sending out, I think, 20 letters a week. That was the goal. Every Friday I wanted it to be, because I knew it would get, based on the county, I knew how long it would get. I wanted them to get it on a Tuesday or Wednesday, like all these like metrics and so what it ended up being was a broker. So I ended up calling brokers because I was like, this is getting very competitive out there. So I pivoted and I went onto Google Maps and I looked for small residential brokers, because I was like, well, they're kind of low hanging fruit. I'm not calling Marcus and Millichap here, or Lindsay Storage, real estate, and I'm not doing that. So, and that's actually what worked. 3 months later, after making a call, the owners actually, I think it might have helped that they got like 10 of my letters. Like, because they even said that at like the closing. They were like, well, the reason why we kind of went with you is because you were so persistent sending us letters. But it was like a family trust. It was 3 locations in a town, which was really nice, and 1 competitor for 5 miles. And couldn't have asked for a better opportunity. But like most people, we didn't buy that at a steal. Like they had a good operation. It wasn't like highly under market. They were smart. They raised rents, but it was our way to get in. And it's kind of like with most of our assets beyond that one burr we did, like we buy them smart, because you can't redo that's where your deal is made, right? It's on the acquisition. It's not on the exit. It's you could do as many things as you want. If you didn't buy right, it's a bad deal. So we made sure that everything was good. Also, I joined the Storage Rebellion at the time. Shout out to Mike Wagner. That's where I met you. So without, the guidance of the community and all of that. I'm not sure. I don't want to take full credit. It takes a village. I didn't, do all that on my own, but I, found storage because of the amount of time it was going to take me to become financially independent and be able to leave my job. And then I found the Storage Rebellion as a community to bounce those, imposter syndrome ideas that we have, and like, is this the right deal? Is this the right thing? And find your tribe basically, and provided the confidence to push through, persistence, and eventually, pivoting to not just like giving up and being like, oh my gosh, this is so hard. People don't call you. Cold calling sucks. Everyone yells at you. You're just kind of like, there's many opportunities for you to stop along that way. But we're very happy we did it. It is a means to an end. I'm not like, I don't know how many of your listeners are, but I'm not excited about self-storage. It doesn't like make me, I don't wake up and go to sleep thinking about it necessarily. Other things in life excite me, but it is a means to an end, just like rental real estate. And anything I can do now to front load my life so I can enjoy the rest of my life, I'm going to do.
Yep. No, well said. Out of all your deals, do you feel any of them are home runs? When going in, did you think any of them were home runs going in?
Yeah, I would say that like at the end of the day, that one single family, definitely, I knew that was going to be a grand slam, but I'm still terrified that I didn't buy right. Like, I think that's what makes you buy right though, right? Is that thought. You're like, did I do it right? Your analysis, you just keep scrubbing it. And I would say the duplex, I felt like looking back, I think that was what I think that's why I bought the second property better. Not that I bought it bad. I mean, like I said, I just, there's $250,000 in appreciation in that alone. But we got lucky there. I think like my strategy totally changed moving forward. And it's that whole idea you sample, test, iterate, like as an engineer would say, right? Like you kind of like figure out where you went wrong. How can I improve? And then you do that. And then you test it again. And I think with storage, I think we did that on the second deal that we're doing now with the competitor in town. That deal is better than the first deal. But the first deal didn't kill us. So
it got you in the game.
Yeah, it did. And I think that's something people got to understand too, is I remember, as we're talking about this, I'm remembering times in like Corey, all these real estate investment associations. Everybody was like, there's this like idea that you have to find a deal and you have to find the best deal. And there were these competitions that they would do like in front of 300 people about who got the best deal of the year. So it really puts this false idea that that's the only way you can do this. And that's not true. Like, get your foot in the door, do something that works for you, because we're all different. You might want appreciation for long term. I might want cash flow. Like, What is your goals? Like, what is your life? I think a lot of people don't ask themselves that question. It's like FOMO. You're just kind of like following the herd. You don't really know what to do. Everybody's dictating what you want to do. Then you're not happy. I don't know. There's a million reasons why you really kind of want to pay attention to the deal, but it's got to work for you. That's one big thing I've learned.
Yeah, no, that's really well said, and something you guys got to pay attention to. That you got to know what you're going after, what your niche is, what your end goal is, or goals right now are. Are you looking for cash flow to get out of your 9 to 5? Are you looking for appreciation for retirement or whatever else? You got to get clear on those, and you can't follow what other people are doing, how they're investing, how they're taking down deals. You and I invest similarly, where we're using our own capital and then using bank loans to take them down. So I think we probably think somewhat similarly, where we're looking at what return we're getting on our money. Others they're not looking necessarily at just that. Maybe they're raising money. It looks a little bit different. So yeah, you got to figure out what works for you and what's best, what vehicle works for you. So that's great. So you said you've got 3 in one town right now, right? And you're picking up a 4th one, and there's only 5 facilities in town. Is that right?
4. Yeah, no, it's 3 I got 3 in one town within a half a mile of each other, and then the fourth one is a quarter mile away or an eighth mile away from our bigger one, our gated nice one, and that'll be 4 of 4 for 5 miles.
That's awesome.
There's
So you basically own the market.
Yes, yeah. There's one other storage facility that's like south of town. It's 10 units. That's all it is. It's just like 10 units. This guy lands on it. It's on his land. Yep. And then there's another guy who owns it just opened up actually last year, like at the worst time. But it was like boat RV storage, which we don't have, and the town needed anyway. So it's a little different of an asset class, which I know you dabble in, but there are none of that on our location. So yeah, we will essentially own the market, which will leverage us in a really good position to sell in the next couple of years.
So that's the plan, to basically have this package and then sell.
Yes, sir.
Cool. So what have you seen already in owning a few properties in the same town, and what do you anticipate in seeing owning basically all the facilities in the same town for the next year or two?
Well, I get to dictate price to an extent, but the big thing is that I'm finding that people are willing to drive further for storage now, and what I think what the preconceived notion used to be is that people put things in storage, they forget it, and then they come back, whenever. I don't think that's the case anymore. I watch gate access, and the activity is insane. I'm like, wow, like we should almost be charging more for maintenance on the doors, because the amount that the same people come back, it's like it's an extension of their house now, as opposed to a place to put their crap. And or like to put like holiday decorations or something, but it's like literally an extension of people's homes now. So I feel like it's a little different. People are moving in and moving out a lot more too. I'm seeing a lot more move-ins, move-outs. Like we've got some specific KPIs we track. Physical occupancy, economic occupancy, like delinquency type stuff. But like right now, like most people, we've seen a dip in occupancies. We've been seeing them slowly come back up. We're like 93% now, and we were at 100. I was trying to like beat people off. Like I was like, will you just leave? Now it's not like that. I'm like, will you just please stay? Please stay.
Yeah. Do you even right now, are you running specials, or are you pretty much the rate is what it is? You're basically the only game in town.
So we've dropped our setup fee. If like that's kind of a special, like we kind of dropped the setup fee because we had a Menards self-storage facility going, like the first in the state of Ohio, 7 miles away, 8 miles away. And they've since opened up another one in Ohio, but they don't do it. And then Global Self-Storage is also a very big competitor, but they're 10 miles away, so it's not too crazy. But we kind of track, I guess, what they're doing in a way, and we kind of like, twist it with like a, hometown feel, right? So we'll do like, if you pay 11 months, we'll give you the 12-month free type of thing. So incentivizing people to just stay longer is more kind of our game, not so much we noticed when we did deals like that, like, 50% off your first month, people literally came in for like 8 days, paid like nothing, and like no security deposit, left crap in the units. I was like, that's not the type of tenant I want. Like, I'm not really concerned about the occupancy number. I'm more concerned about, paying the bills. So, we've since started looking at, how do we retain people for longer, and what kind of incentives can we give that way? So just incentives for paying in advance really is what we've been doing. And we waived the setup fee and I don't know if that's working, quite honestly. But it feels better, I guess. There's no science to it.
Yeah, well, and every market's different too, from what I've seen. Like what may work, a special may work in one market, doesn't work in another. You just kind of throw stuff against the wall, track it, and and hope it works out. You work full time, so how are you managing and taking all the phone calls?
So another shout out to Open Tech Alliance. They've been great for me. It was a little bumpy in the beginning. They were going through some internal overhaul, but they have a program called Remote Manager, and it's fantastic. So American-based call center out of Arizona. They're like 8 to 8, Monday through Friday. Saturday and Sunday, it's like eight hours open basically, and you have a call center that answers the phones if you have like 2 or 3 distinct remote managers. So you know their names. Like I have 3 people that I talk to that contact me that, so if somebody calls in the call center, they will kind of pass it off to them. And then if I need to handle it, like it's like, something happened or, some rare, hey, do you want to take a partial payment on this? They're delinquent, 120 days, but like, yeah, just take it. But that's really the savior here. Because in the beginning, for the first 6 months, 7 months, that was my biggest stress in life, like was answering those phone calls. Like it was, I don't know. I don't I don't want to get into why the phone calls are not great, but
you don't want to answer the phone calls.
Yeah, so that stress is not my stress that I can handle. I can handle different types of stress, but not that. So OpenTech has been super, super helpful. I love being able to just like send an email and people handle it. And it's great. They handle our auctions. They minus like my boots on the ground getting like pictures and cutting the lock. They handle everything all the way out the door. It's fantastic. So that's been, incredible. And having a good boots like that's been, I got a guy right now that, he's like a family member. Like this guy is like fantastic. I don't know what I'd be doing without him. He's great. And I think we're fortunate that way. And I'm very grateful for having this. And I don't think I'd be able to own this type of business for that long. Cause like I said, this is not the stress that I like. That's why I have property managers on my rentals. Like, I don't mind like hustle and all that, but I just dealing with people. I'm not a people person.
Right. So what's your main duties and tasks? It sounds like managing the call center and maybe your boots too.
Yeah. So I'm a little bit more hands-on. I know how you're like, you found a really great way to do it, more technology way, but I found with boots, it's kind of complicated to get for them to get like embrace the technology. So like with ours, we got them a tablet and we have Wi-Fi at each location. So we have a shared Google Drive and we run a report once a week that I kind of throw in Google Sheets and I just format it real quickly. It takes me about 8 to 10 minutes. Throw it into the drive. He has access to it. I shoot him an email and I put notes on the units that need attention that are like storage we use for our property management. So it already has those, it's dirty, it needs to be clean, it needs an overlock. I don't put those. It's more like, hey, can you check if this unit's vacant? They said they were supposed to move out. They didn't call us. Can you just double check? So he does his lock audit and reports to me. And then with OpenTech, I just field emails really. They don't call me unless it's an emergency. Like we had someone 6 months before we had our PDK install our cloud node controller for the gate, so remote access. Before we had that installed, it was like the old school keypad. You actually have to go out to it and change the codes. Someone moved in, but it was their son-in-law that moved in, and they snuck in behind somebody, didn't check the keypad, but they love to do this at like 8 o'clock at night. And no one was answering the phones, but luckily the call center answered the phone. But this is in the beginning with OpenTech, there was a ball dropped and they were locked in there for an hour and a half. They had to call the cops and the cops showed up and then the cops proceeded to be like, who are you and why are you here? Because they kind of they know us. And they're like, why are you in here? Why don't you have a gate code? But that's really the only times that they will call. Is those very rare situations that something like that comes up. Beyond that, it's email, hey Travis, how do you want me to handle this? I'd respond within, 30 minutes because I expect that of them. So why wouldn't I give that to them so they can handle it? And usually it's about people that owe us money.
Yep. Yeah, your story there kind of brings back bad memories of when I was using a call center that I think their hours were, it's definitely, so my gate automatically locks after 9 p.m. You can't get in or out.
Okay.
There were at least 2 people that were on my nerves for the first 2 years of owning self-storage that was like every other day they would be in there at 9:03 and they would try to call. And at that point, the call center, I would get an email saying there was a voicemail. And I'm just getting all these voicemails and it was a nightmare. So I'm so thankful that my call center now is open. They're open, maybe not close to 24/7, but really close. So I don't have to deal with any of that.
Yeah. I always find if I know a tenant's name, that's bad. I should know your name. I should not know your name.
Exactly. Yep. Cool, man. Well, this has been awesome. Let's get into kind of the last 3 questions here. What are you better at than anybody else?
Oh my gosh. Spreadsheets. It's a funny answer, but yeah, I don't know. Analyzing data. Like, I think that a lot of people, it's kind of interesting in our space. I feel like my wife works in commercial real estate, in affordable housing, and they work on multi-million, hundreds of millions of dollars of deals, right? And the spreadsheets that they have are like 81 pages. It's insane. The amount of numbers they're connecting, trying to get these cash flows, ROIs, all these crazy numbers. And then you go to like a RIA and you go in there and you're like, people are just like, what's your cash flow? But that's literally all they're looking at. They're not looking at any other numbers whatsoever. And pretty sure Mike Wagner's made fun of me about the extensive spreadsheet that I made for storage, but it makes me feel better.
Hey, it's your path, right? You've got to figure out what works for you and what your niche is. So
yes,
that's awesome. That's definitely a one-off answer. We haven't had that answer. So spreadsheets, that's good. Well, you're detail oriented, right? Like, yes. I think most people listening can tell that you're very detail oriented. That's your strength.
Probably to a fault.
Yeah, but all of our strengths can be to a fault.
Right.
I mean, we were actually, I was the last episode, we were talking about addiction. Addiction could be a huge superpower, but it can also take you down too, right? Just like any strength, your strength could be your greatest weakness too. We know that it sounds like you're taking another deal down, but what's next for you other than that?
Quite honestly, I know this is probably one you haven't heard either. I kind of want to go volunteer and, in my local community, maybe run for local government. I don't know.
Nice.
Maybe open a farmer's market stand selling sourdough bread. I don't know. There's a lot of things I want to do, man. Open a pizzeria. I don't know. It's just all of those directions are the direction I want to go, which is just freedom, time.
So there it is. Freedom. That's what's next for you.
Yeah.
Awesome, man. That's awesome. I'm sure, if anyone has any questions or want to reach out, connect in any way, where can people find you?
Well, I am a private person, so you won't find me on social media anywhere. Haven't been there for a decade. But Hayden Homes Group at gmail.com, Hayden Homes Group, gmail.com.
Cool. Awesome, man. This has been an awesome show. A lot of wisdom, a lot of tips and tricks that you gave us, and definitely appreciate you coming on here.
Of course. Thanks for having me.
All right. Thanks for listening.
Thanks for following, subscribing, and listening to this episode of the Do More podcast hosted by John Farling. To learn more or ask questions, go to l4investing.com.